Hi everyone, let's look at the low time frame bullish and bearish scenario, starting with the bearish scenario where we're looking for a 1-2-1-2, eventually for then a bigger 3 to the downside for much lower prices to come, where if we look at the second 1-2 over here for then a 3 to the downside, this wave 2 retraced all the way to the 886, which is a rare target for wave 2 and actually more common for a wave B or X, but for a wave 2 it's very rare to retrace this deep, so that is at least something to keep in mind also with the structure to the downside. But in this particular scenario, if this is a 1-2 and then a 1-2 for then a 3 to the downside, you definitely want to see volume increasing while price is moving to the downside. So with this candle over here, seeing the volume peak is something you like to see, but you do like to see that consistently with every big push price is going to make to the downside. Now also in this particular scenario, if this is an impulsive move to the downside, then this over here being a wave 2, then this is again a 1-2, eventually looking for a 3-4-5, right, to the downside. So for me the invalidation is if price is going to retrace too high from where it is now, because if this is a 1-2 and then eventually you're looking to downside for then this high volume candle being at least part of a wave 3, you want to see a wave 4 and then eventually a wave 5. You want to see this low taken, basically. That is the goal. So if price is going to go higher and it basically retraces too high, that is the moment where for me this scenario is going to be invalidated and potentially more upside, or the second scenario I have is going to be a lot more probable. So currently the pivot that I have for the fibs that I have on the chart right now is basically this high with the low, because if this is then a 1-2, you could say this is another 1-2, 1-2, I don't know, many 1-2s are possible, but let's say that if this is a 1-2, this is wave 3, this is wave 4, so this wave 4 over here is part of this wave 2, then the official pull should be from the high of this wave 2 over here to the low that we have, and there you can see that the invalidation for me is right at the rare target as well for a wave 4, which is the 0.618. The more common targets for a wave 4 are the 236, 382 and the 0.5, but usually if you see candles closing above the 0.5, especially the higher ones like higher time frame ones, that is the moment it's quite invalidated, and yeah, potentially more upside is expected. To the downside though, we are then expecting with this scenario deeper prices to come, where the first real support area we then have is if price is going to continue to the downside is going to be between 28.2 and 27.8k with a couple of confluences, where also if this is then a 1-2 and the yellow 3, a usually minimum target for wave 3 is the 1.618, which also has nice confluence with this target box over here. So we have to wait and see if price is going to continue its way to the downside or if we're going to get eventually a little bit more upside, because the second scenario I have is this one, which is at least a little bit more bullish because we eventually expect a bit more upside. Now price took the low that we made yesterday, it wicked down, closed above, and is now ranging here a bit. And if we look at the CVD actually on a local time frame over here, you can see there is a little bit of absorption going on, right? Like price making some higher lows and then CVD making lower lows. However, from experience, I do know, and I'm not saying this is going to happen, but from experience, if there is a high volume move, the CVD after a high volume move has a higher probability, because in the end we are trading based on probabilities. Nothing is 100%, but there's a higher probability that CVD is leading, meaning that price can follow CVD to, in this case, the downside, because CVD is going down, so it might lead price when price is going to the downside. But as long as this low is not taken, the divergence is active, right? That's basically also true. So in this particular scenario, we're then looking for after the high, having this as a W, this as a X over here being a double zigzag, for then an impulsive first move to the downside, which then is an A, B, C. So looking at this to be then an A wave, which is an impulsive wave. And that also means that if this is an impulsive wave, this can be a 1, 2, 3, 4, still looking then for a wave 5 to the downside to at least take this low. Then this move could be finished as a wave A, followed then by a 3-wave corrective structure in wave B, where the invalidation is going above the high of wave X, and then you expect another similar move like A in this wave C, where the most common target for wave Y, in this then being a WX and then a Y over here, is between the 1 and the 1.236, where you can also see it has at least a little bit of confluence with the target box between basically around 28k, right? So this is something that is quite an interesting scenario. where yeah, again, in this scenario we would take this low at least as a bare minimum. Now if price would continue to the downside, basically if it goes down and it goes all the way down to the target box, that is something I don't necessarily like to see, because then I think this wave A might already be very deep, and then this wave B has to retrace very, very high, maybe all the way up here, to then have a wave C ending inside this target box. So the longer wave A is, the higher the retracement of B basically needs to become in order for wave C to still end inside this target box for then a wave Y. Now if we then talk about the, let's say, unlikely but even I guess most bullish scenario, then I do have to put this one on the chart once again. Now I already spoke about this scenario, so I'll remove this. However, I don't necessarily think that, you know, it's kind of invalidated, but yeah, there is still the very, 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 very rare target of the 0.618. But let's just say in a hypothetical world that this is still the high of 3, somehow this is still 4 and 5, then what is this structure going to be? Well, then this is a 3-wave structure, right? So this is then a W. This cannot be an A, B, C. It's not possible following the Elliott Wave theory, because if you want wave C to be an impulsive structure in an ABC, wave B has to retrace to at least 90% of wave A. And that basically means, oh, it is a, where's the regular flat? Over here. So that means that this wave B has to retrace all the way to at least the red line at 30.8K, which it didn't. It didn't retrace all the way up here. So as it stands now, this is then a W. Then this move over here is an X. And then we expect a Y to the downside, right? But let's say we expect upside now. That basically means that this has to be a W, this an X, and this is then a 3-wave in Y, where if this is an ABC, this wave C is enormously extended compared to wave A, which is, it doesn't even fit the targets for a wave C. So if price moves to the upside, we really have to do some more research, because downside is a lot more likely than upside, because this can simply not be an ABC, because if wave C wants to be an impulsive move, it has to retrace wave A by at least 90% to then have a wave C impulse to the downside. If it doesn't retrace all the way up here, it is a different structure, right? So yeah, if this is going to be the end of the move to the downside after taking this low and we have upside coming, I mean, probability wise, it is unlikely, but then this structure over here has to be its individual 3-wave structure. But if this is a W, wave X can be very short, that's normal, but usually wave Y in time is quite similar to wave W. And as you can see, if this is wave Y, it is first of all very, very short compared to then a long W as well. And again, if this is then a wave A, let's go to the 15. If this is A, this is B, and this is part of a wave C, then this wave C is extremely long, because if this is a zigzag and then an A, B, C zigzag, right? And we put on the zigzag targets, that you can see this is the most common target for a zigzag wave C, which is literally here. A rare target for a zigzag is the 1.618, which is here. And you can see we basically bashed through all of those targets. So yeah, it's very unlikely that this is some sort of a 3-wave structure, and it is a lot more likely this is part of an impulse, which therefore also means it is more likely that price after this ranging over here, however high it goes, at least not too high, eventually finds a little bit more downside still yet to come. So I hope this video was helpful or valuable to you. Please check out the macro and high time frame video if you're interested. And for now, I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.